Back to the markets. Despite the recent volatility we've seen, investors remain mostly bullish on stocks, fueled in part by that upbeat jobs report we got back on Friday. But with the trade war brewing and signs of rising inflation, how long is it before sentiment is reversed? Jonathan Hoenig at capitalistpig.com is on set with us.
Great to be with you.
Good to see you. All right, so let's start with that potential trade war brewing. Your thoughts on, is that what? I mean, Caterpillar and Boeing were down the most yesterday, really impacting the Dow.
Yeah, I mean, nothing has seemed to stop this market for the better part of 9 years. I don't know if a potential trade war could do it, Lauren. It doesn't seem to, at least when it comes to the NASDAQ and technology stocks. Another new all-time high for the NASDAQ. But as you said, there's really reasons for concern here. We haven't seen, forget even a trade war, we haven't seen inflation in this country, really demonstrable inflation for the better part of 30 years. So you add that to the potential of a trade war that could be now brewing. You have a lot of European countries, as you know, promising let's say, damaging trade tariffs against the U.S.
Right.
That's going to be a real negative for our economy.
Yeah, and a lot of economists, Larry Kudlow and Stephen Moore, two of them, they wrote an op-ed in the Wall Street Journal today, basically saying, look, this notion that wages can't go up and we can have inflation and we can also grow the economy at the same time. Do you think you can do both of those at the same time and have a trade war?
Well, we don't want any of it. I think that's the point.
We have a lot of it now.
We have more and more inflation. I think for me, that's even probably the bigger concern than a trade war. I don't think a trade war, if it starts, goes very far. Look at the Bush example from 2002. Just a couple months into it, the administration realized that, in fact, the trade war was costing jobs as against creating jobs. What worries me, again, is about inflation. We're already starting to see, and I know we'll get the jobs number at 8:30 this morning, we're starting to see upward momentum on wages. That's going to
the inflation number.
Excuse me, the inflation number. Excuse me. So we're starting to see upward pressure on income. That's going to push inflation up. We haven't seen this in this market, certainly not in the 10 years.
Yeah.
And as I said, in the better part of almost a couple of decades, this is something that today's investors aren't really ready for.
Who do you think replaces Gary Cohn?
Well, Larry Kudlow seems to be the front runner, and I think it would be a real positive. I mean, trade is good, Lauren.
He's free trade, though.
He is free trade. And
what about Navarro, who's not?
That's a worry. I mean, I think, unfortunately, there's a real misconception about the benefit of trade in this country, even among a lot of supposedly conservative right-wingers. They think that trade is somehow bad, that trade is somehow destructive. Just the opposite is true.
Right.
And in fact, I think a lot of the trade with China has been one of the reasons that inflation has been kept so low for so long in this country.
Yeah, last question for you. As a result of Dodd-Frank, I know that was years ago, but we're starting to see some of the big public companies tell you, our CEO makes this much money, the median worker salary is this much, and now we know what our coworkers make. We heard from a big bank, Bank of America. CEO Moynihan makes $23 million, and the average employee, $87,000.
And he's worth it. He's worth it. I mean, right, this was a big thing after Dodd-Frank.
You don't think anyone's going to be annoyed about this? Or
a good CEO is worth that money and a lot more, and certainly more than, average workers are important, but they are the average worker. Not everyone can be a CEO. This was a big thing, as you said, after Dodd-Frank. Well, isn't it outrageous that the best CEO or that CEOs make so much more than the average worker? I think we've learned that good CEOs are, in fact, worth it. And if people don't want to support it, sell the stock. That's the free market word.
All right, you heard it here. Jonathan Hoenig, thank you so much.
Guys.
Good to see you.